So the first question I get the most with the system, when you first load it up, we'll have like 1 2 minute videos posted on YouTube on how to actually log into the Fractal system in a second. But when you do load in, your left hand side is going to be blank. Like mine has some symbols over here, but you're going to see a blank chart in front of you, and this left hand side is going to be completely blank. You're going to right click on this left hand side column. You can select add and then type in symbols. You can do like GC. If you want to do GC, NQ, or ES, you're going to do GC equals F, and you select add, and then it'll show up over here, right? Or you can do NQ equals F, ES equals F, whatever you want. Or you can do any symbol like Tesla. You can do that. You can do Meta, whatever you want. You can add it there. Don't worry so much about the aggregation. That just means time frame, the days to load, and the wave, because you can change these afterwards. So let's say we add like a bunch of metas that are all wave 1 daily. You can go in and change the wave and time frame down here to whatever you want it to be, right? You can change that around. Now, if you don't want to go through adding everything individually, you can right click, select load, and then there's a bunch of watch lists you can choose here. So feel free to go through those and see if there's anything that you like. Now, last up, if you decide that you want to make a watch list on your own, you add all the symbols in individually, you just right click, select save, and then type in what you want your watch list to be. And now every time you go into the system, you'll click load, you go to your watch list, and everything you added is there. So that is, first off, how you're going to get these symbols to show up on your chart. Super simple. Just go through those steps. After that, we're going to actually start breaking down what the charts are. So you have a non-linear chart in front of you. That's the biggest difference between the Fractal software and any other chart you look at. For example, our price over here, our price is going to be on the right hand side. So our price right here on GLD was 417. Our price right here was 459, and our price right here was 482. You have three completely different prices, but notice how they all reverse at the same point. On a normal chart, if you're at 29,500, no matter how far left or right you go, you're always going to be at 29,500. So you're looking from like a bird's eye view, the cycles or pattern the market's making. Now you have long cycles and short cycles. Your pivot is this black line in the middle, and then you have your long cycle here. So however many days it takes to go from pivot up to the high and then back to pivot, that's your long wave or long cycle. And then when you go below pivot, you have from pivot to the low and then back to pivot. That's your short cycle. And what these L2, L9, L1s are standing for is just how many days. This is the daily time frame. You can see aggregation daily. This is how many days it took to get to the high or the low. So it took 8 candles to get to this high. It took 9 candles to get to this low. It took 2 to get to this low. It took 1 to get to this low. That's what the H and L stand for. Now, you'll notice that on these, we're constantly going back and forth between pivot, which again, black line in the center. You have H1, H2, H3. We're just very often going back and forth. And these cycles, or these long and short waves, are very small. As you increase the wave, let's go to something like the 7 wave, you'll start to see that we spend more time on each side of pivot. So you can see H18, H34, L16, and these cycles or waves in the market start to become a little bit longer. Then we'll go to the 50 wave, load up some more days. So this looks like a very incomplete picture, right? All you have to do, just click this days to load and increase it. So we'll go from like 200 days loaded to 2,000. Now you get a better idea. And you can see these cycles in the market, we start spending a lot more time. 260 days, 260 days, 84 days, 88 days. And you're starting to see long cycles and short cycles above and below pivot. Then you could go all the way up to something like the 200 wave. The highest one will load up 15,000 days. When it loads. And now you're looking at the largest wave and time frame combination there is on fractals. And you'll see we spend years on one side of pivot here. 724 days above, 657. Down here you had 720 days below pivot. So as you increase the wave, you start to notice more time on each side of pivot and longer trends in the market. Now, something like this, the 200 wave daily, is not going to be very useful on like your day-to-day bias or whatever you're looking at. You can see where we were up here, there was no previous data to the left and just nothing to work with. So what you can then do is, instead of using something like the 200 wave daily, you can lower the time frame and now look at the 200 wave 1 minute. So you're still using that 200 wave, but you're now getting a smaller time frame, so you can potentially use this on, for a day trader, something throughout the day. My go-to wave and time frames are going to be the 20 wave 5 minute, the 7 wave 5 minute, the 10 wave 15 minute, and the 50 wave 1 minute. Now, this is not to say that these are the only combinations of waves and time frames you can use. I'll post a picture in the chat for you guys to save. This is not to say these are the only time frames that you can use. It's just what I've found success with since I've started using fractals. But for example, like I use the 20 wave 5 minute, and other people prefer to use the 20 wave 15 minute. There's not a right or a wrong. The more screen time you get, you can see what works best for your strategy and how you want to use these going forward. Now after that, on these time frames, there's a few things we're going to break down here. First of them, which is vector, which I'm sure a lot of you are familiar with by now. But what it is this purple line here. When we are below pivot, the black line in the center, and below vector, you're looking for a continuation of the downside. So you can see we retested vector, continue lower, retest vector, continue lower, retest vector, continue lower, retest vector, continue lower. Now when you cross above vector, right, when you're below pivot and cross above vector, you're then looking for a move back to pivot and then continuation to the upside. And then it's the same thing on the opposite side of pivot. When you are above pivot and above vector, you look for a continuation higher. Then when you cross below vector, you start looking for a move back to pivot. So we can use this to ride trends in the market. I'll show you guys a very simple picture of it. All right, so right here's a good example. You have these yellow boxes are a vector, and it's super simple because you can trail your stops below vector. So when we were in longs, we would just trail our stops below the last vector value, so you can see top of vectors, bottom of vectors, put your stop below and ride it up. And then we went short, then we continue to chart our vectors, and as long as we maintain below, then we're looking for a continuation to the downside, as you can see here, right? We just keep testing vector and ride them lower and trail your stops off of that. Now, the way we actually get these boxes, because you can see here, it's a singular value. Right here on the 20 wave 5 minute, vector is 29,490. But what I'll do is go through those 4 time frames we talked about. So the 50 wave 1 minute, the vector is right here at 29,473. Then the 20 wave 5 minute, 29,492. 10 wave 15 minute, 29,513. And the 7 wave 5 minute, 29,459. So I'll take the highest value, the lowest value, and that's how you get those boxes. You can chart them out and just ride the trend off of that, trail your stops, whatever you choose to do. Now, after the vectors, there's some more things we're going to break down here. Next up are these clusters, or these black dashes on the right-hand side. So these are left behind at previous highs and lows of our long and short cycles between pivot. So you can see this was our low, we reversed back to pivot, ended the short cycle, it leaves behind this cluster here on the right-hand side. So these are marking out previous reversal points on the Fractal software. And one way to look at it is, okay, well, when we have a lot of reversals in one point, let me see if I can find an example for you guys. Not a great example, but notice how this cluster right here is a little bit thicker than the rest. Like you have a cluster here, but this one's a little bit thicker. That's because we've had multiple reversals at that point. So you can see this one here, we had one singular reversal at this point, cluster there. But here we had a reversal over here and a reversal right here today. So you have a thicker cluster. You can then view that as when we have these thicker clusters, that's potential for heavier support or resistance at that point, because it just means we've had more reversals in that area. Now, you can also look at it and say, okay, well, when we have, notice this blank space between this cluster right here and these clusters down here, right? When we break above this set of clusters, you can then view that as, okay, well, if we have this thing called blank space, there's just an area where we have no clusters, there's potential for just us to to very easily move through that range because we've had no previous reversals at that point. So we just call that blank space with clusters, and you can look for just a trend through that and potential for not much resistance or support in that area. So those are the clusters. After that, you have these percent odds. So if you click this icon on the right hand side, you'll see these percent odds pop up. If you click it a bunch of times, it's just going to keep layering it. To get rid of it, you have to click the back arrow as many times as you click the percent odds. So just keep clicking that and eventually it will go away. But what these percent odds are showing you is above and below pivot, how often we reach these points. So you can see 80, 50, 20, 10, 5, and the 2% odds all the way down here. What it's saying is, okay, well, when we're above pivot, we reach this point 80% of the time. So very frequently, when you cross above this black line in the middle, we're going to reach at least this point. And then we reach this point 50%, 20%, 10%, and 5%. So this 5% odd you can view as, okay, well, when we're above pivot, only 5% of our long cycles reach this point. So in turn, 5% chance or less of us continuing in that direction. Same thing with the 2% odds, right? If we only reach this 2% of the time, our odds of continuing lower is going to be 2% or less. So that's when we start to form a bias, is when we're at these very low percent odds. And that's kind of the very start of the strategy we'll continue to explain throughout the rest of this video. So those are the percent odds, just giving you how often we reach these points above and below pivot. Then the last thing we're going to break down on this is the open states. So to get the open states on your chart, you're going to right click, select graph settings, and then this S/R dots is going to be off. You're going to turn that on and you get your open states. It also comes with show statistics on. I have that off just for a little bit less clutter on the screen, but that's up to you guys. And it also comes with guidance navigating fractal information on. I have this off as well, but that's up to you guys. So I'll post what my settings look like in the chat. And there's a lot more settings that we can go over in the future. So that's how you get these open states to show up on your chart. And these are similar to clusters in the sense that they're being left behind at previous highs and lows of these cycles. Now, the way that Russell first explained it to me years ago when I started learning is the market likes to stay in balance. So even though it's a non-linear chart, we're still going to look for these previous highs and lows to be tapped. And when these open states do get tested, you can see they go from, right here it says open, when they get tested, they change to closed. So even though this is a non-linear chart, right, like this price over here, let me actually show you guys an example today. Right here, for example, this was at 29,288, but when we tested it, we were at 29,578. Two completely different prices, but the market likes to stay in balance and retest these previous reversals. You can see over here, really good example. Reversal here, reversal here, reversal here. All three different prices, but we're trying to keep that market in balance and retest these previous open states. Another example right here. You get a reversal here, here, and here. All at the 2% odds, and they all reverse at that same point when they close the open state. So we can use these open states, one, as targets, because we're going to look for them to get filled, but then also potential reversal points, because if we reversed off of them previously, we can look for that to happen again. So now that we kind of broke down everything you see on this chart, we start to combine those things to find potential entries. So does anyone have questions so far? Let me know, and I'll try and go through those real quick, and then we'll kind of start breaking down how the strategy works with looking for reversals. What does the wave represent again? So the wave represents the cycles above and below pivot. As you increase, so you have long cycles and short cycles. And one way to view it is, so here's a picture of the wave 1 daily, right? And wave 1 is the smallest wave. You have wave 1 all the way up to wave 200. And notice how we're constantly going back and forth between pivot, right? You have very short waves in each direction. But as you increase the wave, we'll go all the way up to the 200 wave daily. You're now going to start noticing, look how much longer these trends or cycles are lasting in the market. So if you look here now, right, your waves are looking more like this. So you have much longer cycles in the market, and that's what those waves are representing, just the cycle above and below pivot and how long those cycles will last. Can you compare it to a regular chart? Yeah, so This will be another example of using those higher waves. So when we use like the 20 wave 5 minute, 10 wave 15 minute, 7 wave 5, 50 wave 1, we're typically looking for reversals in in that hour or within that day, right? But if you use something like the 50 wave daily, here's a really cool example. This was Bitcoin. So you can use anything on Yahoo Finance you could find on Fractals. Bitcoin, Solana, Oil, ES, NQ, Tesla, Meta, whatever's on Yahoo Finance you could find on Fractals. But here's the 50 wave daily. So it's a relatively large wave on the daily time frame. This is looking for more of a macro trend in the market. And compared to a linear chart, this candle right here was January 8th, 2024. And then here was January 2025. Okay, so on the 50 wave daily, right here, when we were at the 5% odds, we have this previous high. And you can see the price on the right hand side. That was at about 49,000. And the date is going to be down here on the bottom. But so here you have January 2024. Price is at 49,000 on Bitcoin. So that was right here. January 2024, 49,000. Then about a year later, we have these cycles down, and then we start coming back up. We retest that previous reversal point, but this time we are at January 2025 at 109,000. So this is a year apart and a $60,000 difference. On a linear chart, we're at all-time highs. There is nothing for us to trade to the left because this is the highest Bitcoin's ever been, right? There's no data over here. But because the fractal chart's non-linear, 49,000 2024, 109,000 2025. And you can see we reversed that perfectly. From 109,000, we went to a low of 74,000 over the next about 2.5 months, give or take. And then where we get to, we went to this previous reversal and then bounced back up to our new all-time highs of 123,000, which was right about here. So with it being a nonlinear chart, you're not going to see these type of moves looking at this chart here. Like why would 49,000 have any correlation to shorting at 110,000 outside of what you're seeing on this Wave 50 daily chart on the Fractal software? All right, so that's an example of a real chart compared to fractals. Now we'll start breaking down more so how we use these smaller time frames for our actual entries. So this is going to be kind of like an intro to my reversal strategy and what we look for. And now we just start pairing everything on these 4 time frames. So we talked about the percent odds, right? When we are at these low percent odds, we have our bias to start looking for reversals. But the bias alone is not enough to short or long a trade, because we can be at the 2% odds but have no previous reversals and keep trending in that direction. The biggest thing with fractals is don't let a 2% odds bias blow your account, because we can continue to just trend in that direction and have an outlier. Outliers do occur. We're trading probability, we're trading statistics, but there's always going to be a day where we're at the 2% odds and we just keep going higher, or we just keep going lower. And if you try to fight that trend too much, you're just going to end up blowing your account, because outliers can happen. When they do, we need to know when to just call it and look for the next A+ setup the next day when we're no longer trending in an outlier. So you have the percent odds, and then we also pair that with these previous reversals. So you have open state here, cluster here. That's our resistance or our entry points to get in off of. So we have the percent odds for our bias, and then you pair that with the open states, clusters, whatever else it may be. But you don't just do it on one time frame. So I'll show you guys today's trade to kind of break it down. So we went short at 29,580. Reason for that, the 50 wave 1 minute was above the 5% odds, right? So we have a 5% chance or less of continuing higher, and it tested this previous open state or this previous reversal. It closed that. Then on the 20 wave 5 minute, same idea. We're above the 5% odds, and we tested this open state here. Then on the 10 wave 50 minutes, same thing. Above this 5% odds, tested this open state. And then last up, 7 wave 5 minute, you can see we were at these thick set of clusters here between the 10 and 5% odds. And what do we know about thick clusters? That just represents more reversals. You can see 1 reversal, 2 reversal, 3 reversals, 4, 5, 6, 7, 8 previous reversals, all between this 5 and 10% odds, and we were in that range. So what we're looking for is low percent odds across all time frames. That gives us our bias. But then also testing open states, clusters, or previous reversals to get our actual entry point off of. And then last up, 7-wave 60-minute, you can see same thing, 10% odds, and tap this previous open state that's now closed. So we look for reversals off of those as our resistance, pair that with the percent odds, and it did hit TP1. We only had a 50-point stop, and then it went back to break even for New York Open, and then ran all the way up to being 180 points in profit. So that's what we're looking for, low percent odds, then pair that with these open states and clusters to find our actual entry points and reversals. Now, I'll show you guys one more. Let me pull up this setup real quick. All right, so here's another one. We'll talk about splicing in the future. We'll make some videos on that, but we had a long bias because of what's listed here. You guys might not understand that just yet, but we were in longs, and this was the example of the vectors I was showing you guys, right? Like, we had our vectors, trailer stop, and our target was this splice target. And then we said, big fan of exit at splice, then short setup around 5130 to 5140. So what we're actually looking at on the smaller fractal time frames. You have 20-wave 5-minute. The 10% odds is at 5123, but the 5% odds, that's more so what we're looking at, 5136, and this open state at 5138, right? Next up, you have on the 50-wave 1-minute, you have this open state at 5131, and it's above the 5% odds. 10-wave 15-minute, it's between the 20 and 50% odds, but you have this thick cluster here at 5132, showing that we have 1 reversal, 2 reversal, 3, 4 previous reversals, all at this point at 5132. And then last up, 7-wave 5-minute, you have the 5% odds at 5132, and this open state at 5137. Also these long medians, which will be broken down in a future video. But all of these time frames were at the 5% odds, 5% odds. This one was not as overextended. We'll touch on that in a second. And then also the 5% odds. So all time frames had a very low percent chance of continuing in that direction. And we also had these clusters or open states, previous reversals to take our entry off of. Now back to the 10-wave 15-minute. This is a larger combination of a wave and time frame, so it gets overextended less frequently. Like the 7-wave 60-minute we were showing today on NQ. We kind of broke that down in live voice this morning. It's only gotten to the 10% odds 1, 2, 3, 4, 5, 6, 7 times previously, where the 7-wave 5-minute has gotten up to the 10% odds. This is over the last 50 days I was showing the 7-wave 60-minute. The 7-wave 5-minute has gotten up there the same amount of times or more in just the last 10 days. So these larger combinations of waves and time frames, they might get overextended less frequently, but just because this isn't at the 5% odds doesn't invalidate what it's showing for the trade, right? We still have 4 previous reversals at this 5132 open state, and it lines up with what all the other smaller time frames are telling us. So that's what you're kind of looking for, a confluence between all the time frames to find these reversals. Now someone asked about stop placement with these. So we know that our resistance, or the area that we're looking to short all these previous reversals, is all between about 5130 to 5140. What I choose for my entries, one, you can either just enter on the test of the zone, so that would have been at 5130, put your stop at like 5142, and that would have been a 12-point stop, totally fine on GC as long as you're sizing correctly. Or you can look for an entry at wherever like the highest density of reversals is inside that range. And if you look here, you have where was it, right here, you had a reversal at 31, all these reversals at 32, right, that very thick cluster, and then also this 5% odds at 5132 lined up with these 2 previous reversals. So you see a lot of reversals happening. Like our whole resistance range is about 30 to 40, but where we're seeing a lot of those reversals at is at 5132. So we entered at 5132, and we just put our stop above our last level, which was 5140, so we put it at 5142, 10-point stop, and then you can see how that played out, right? Absolute high day, and then just ride that to the downside. So that's kind of a breakdown of what I'm actually looking for in these reversal setups. Let me know if you guys have questions on that. So you can use it on smaller time frames or more like macro trend, like you saw Bitcoin. This was all-time highs, and then we top ticked all-time highs just off of that 50-wave daily. But then example like today, we got a pretty good entry on NQ for 180 points, or what would have been if we didn't get stop break even after TP1. And that was using smaller fractal time frames to kind of give us where are we going within the next hour, 2 hours, potentially end of day. So there's different ways you can use fractals, and we'll continue to build on more strategies as we go, but that's just like the very basics of what I'm looking for in reversal trades. Awesome, yeah, it's not a hard system to learn. It looks very, like, this looks insanely confusing at first glance, but when you start actually breaking down what you should be looking for in this on these charts, it gets a lot easier. Like for me, I don't take any trades when we're between this like 80 to 50% odds range. You can see it looks extremely cluttered, and we're just going back and forth between pivot. More so on these charts, all I'm really looking at is, okay, well, when are we going to be at these 5% odds? What previous reversals at these points should we be looking for entries off of? And like, sure, you can. There's tools and times to be using these lower percent odds, but for trading reversals with fractals, when you want those A plus setups, you just got to be patient and wait for us to get up to these levels, and then you have your setups. It's just, comes down to being patient enough to wait for those to form. How do you find your daily buys? We'll break that down in a future video. Well, there's one thing you can look at. So on the Wave 1 daily, like this was an example last week. See this H4 that we were talking about? This is how many candles it takes to get to the high. This is on the Wave 1 daily. So if you right click and go to Option Analyzer, you'll see these two graphs show up. The green, this left side, is showing when we're above pivot, and this right side here is showing when we're below pivot. What it's saying is, how often do we continue to the next H or L value? So in H1, you can see it's at 100%, and in L1 is at 100%. That's because if we are above or below pivot, we have to have an H1 or L1. So 100% of the time above pivot, we're going to have an H1, and 100% of the time below pivot, we're going to have an L1. That's just, you have to have that, or else you're not actually above or below pivot. But then continuing to the next one, you can see 49%. So it's saying of the last 200 days, only 49% of the time do we continue to an H2. So this H2 here, H2 here, H2 here, and so on. Then to the H3, only 22% of the time do we continue to an H3. Then 17% of the time do we continue to an H4. So last week you can see we were on an H4 right here. If you look on this chart, we only continued to an H5 about 12% of the time over the last 200 days. So that alone is giving us some sort of a short bias going into tomorrow, because our odds of continuing higher over the last 200 days has only been 12% of the time, right? And then you can look for reversals off of that. Now, there are more tools that you can pair with that, and we'll go over that in the future, but that's just like a very quick one you can look at. And one thing people will do for swing trades is they will wait for, let's see if I can find an example. Like right here, we're at an H11 on NVIDIA. If you right click, you can go to Option Analyzer. You can see from this H11, we've never continued to a higher value. But what you can also do is increase the days to load. So let's go on NVIDIA over 10,000 days. You're not going to be able to read this chart in a second, so don't expect to be able to read this, right? Super cluttered. But what you can then do is go to Option Analyzer again, and you're looking at the same data here, right? How often do we continue to the next one? But now it's over 10,000 days. So you can see from this H11, over 10,000 days, we've never continued higher to an H12. So, over 10,000 days, if it's never happened before, I like my odds for going short into the following day. Now, those are some very extreme examples, but that's what people use for finding swing trades. Or I don't know if you want to call it swing trades. Sure, you have swing trades that are like this Bitcoin one that are extremely macro, right? This is a 40,000 point drop or whatever else it was. But you can also use these Wave 1 daily, finding when we're at these high and low H and L values to potentially swing trade into this week or end of next week, So super simple stuff you can use for daily buys, but we'll build on that more in the future. Are there certain sessions where this works better? I wouldn't say it works better in one or the other, because the whole idea with fractals is you're trading data or previous statistics. Now, these setups can form really any time of day, and you're trading less on the time of day and just more when the data is in your favor. Now, that's why even on things like CPI or FOMC, people say, oh, if you're trading on those days, you're gambling. Well, over FOMC, we probably have a 70 to 80% win rate when we're waiting for these A plus setups. The only thing that's changing is the volatility. And sure, if you want to size down because of that increase in volatility, totally fine. But the data is still expected to play the same. Sure, there will be days like this day. On Friday, you can see reversal here, reversal here, reversal here. We tested it for the fourth time and it continued lower, right? That's an outlier. It happens. But if you had longed the 3 other times And on this fourth time, you had proper risk management, stops below. You're not trying to long the entire way. You went 3 for 4, 75%. And all of these reversals were at least, let's see, like this went to 28,942 up to 29,250. So that right there, 300-point reversal. This here, 28,830 went to a high of 29,358. So there's a 500-point reversal. And then this one here, 30,080 up to 30,260, 200-point reversal. And then all you had to do was lose 50 points here, realize that it's an outlier, not try and continue to long in this range because there's really no point behind that. And you just made, you just profited, what is it, like 900 points while only losing 50. Finding where to trim. There's a couple things you can do. You can just have a set R on every trade you take, or you can use the same reason why we entered long, right? You can use, or short, you can use that on the opposite side of pivot. So you'll see right now is actually a pretty good example. On the 10-way 15-minute, we went short up here, right? Because we were above the 5% odds. We were testing that previous reversal point. Now would be a good point to sell as well because we're at the 20 and 10% odds and filling this previous reversal point. So the same reason why we would short, you can use that for a TP because why am I going to, sure, you can hold runners to lower, right? See if it's an outlier or see if there's levels lower you want us to get to. But if we're going to short at the 5% odds, why are we not going to take our trims or whether it's a full exit or just leave runners by this point, why are we not going to do that by the time we test the 10% odds? Because we only reach this point 10% of the time. Our odds of continuing lower is going to be 10% or less. So you can use these things, open states, percent odds clusters, or levels on these charts, which will break these all down in the future. You can see these played extremely well today. You had a bounce. This is a weekly spread monster level. We'll touch on that. The IV walls, we'll touch on that in the future. All of that are things you can use for entries and also TPs. To get the Fractal software, go to software access. You can purchase access here. You'll be paying Russell for that. And then go to tickets, open up a purchase Fractals ticket, and then fill out the info at the top, and then it'll get you a login set up.